Shopping for a home when you're in the market is usually the easy part. Getting a mortgage for it can sometimes take a little more work, but there are plenty of options, especially here at Proponent, to ensure your homeownership dream can come true. Hi, I'm Beverly Brister, and we brought Chris Correll, our VP of First Mortgages, back to talk about an often misunderstood loan type, adjustable rate mortgages. Hi, Chris. Thanks for coming in and explaining this to us.
Hi, Beverly. It's great to see you again. Thanks for having me back.
You as well. Now, when you say adjustable rate mortgages, it sounds scary for some people, especially with a big investment like a home. Can you explain what they are and how they work?
Sure. So, to your point, adjustable rate mortgages, or ARMs as they're also known, kind of took a bad rap back during the housing crisis a few years ago. Now, some of that is justified, but a lot of it really isn't. Basically, the difference between an adjustable rate and a fixed rate loan is that an ARM is going to start out at a lower interest rate for a period of time, and then it's going to typically reprice. So, of course, that does carry the risk of higher payments, but the key is to using an ARM the right way and for the right reasons. If you can accomplish that, a lot of times you can save a substantial amount of money.
Great. How would a person know when to take an ARM versus a fixed rate loan?
So the key there is how long you intend to need the loan itself. So for example, if your plans are to sell the home and relocate in a few years, that's a great situation where you might consider an ARM. On the other hand, maybe you have no intentions to sell the property, but you expect to inherit money or sell some investments and pay the loan off early. Again, those are great reasons to look at an ARM.
Okay. Can you show us an example?
I sure can. So let's look at an example of a $240,000 mortgage, 30-year fixed at 5.25% versus a 7/1 ARM at 3.875. Now your monthly principal and interest on that 30-year option is a little over $1,300. Monthly principal and interest on the 7/1 ARM, however, is only a little over $1,100. That's a difference of roughly $200 per month. Over the course of the initial 7 years, or 84 months, that amounts to over $16,000 in cost savings. But there's actually another benefit. Keep in mind that because the interest rate is so much lower on the adjustable rate, you're establishing additional equity in your home. What that amounts to over the course of the initial 7 years is over $6,000. When you add both of those benefits, you're talking nearly $23,000 in savings over that initial 7 years.
Wow, that is a great savings. Now, can an ARM come in different terms?
Absolutely. So most lenders offer a variety of adjustable rate products. Here at Proponent, all of our ARMs are based on a total term of 30 years, and the initial rate can be fixed for a period of 1, 3, 5, 7, or 10 years, after which point the loan will begin to reprice according to the initial agreement.
Are there any caveats a person should look out for when choosing an ARM?
Well, as I kind of mentioned earlier, one thing that you always want to keep in mind is whatever the initial term of that ARM is, you want it to align with your plans. So for example, if you plan to need the loan for the next 6 or 7 years, you're going to be inclined to take a longer term ARM, like say a 7 or 10-year ARM, as opposed to maybe a shorter one, like say a 1-year or 3-year ARM.
Okay. And what are the benefits of getting an ARM with Proponent versus other financial institutions?
Well, I think there are a few. Certainly, we have a nice lineup of adjustable rate products available to our members. We also typically price them pretty aggressively, and our staff is really well educated as far as adjustable rate loans, so they can answer some of those more detailed questions that a member might have.
Well, all right. How can viewers get in touch with our mortgage experts?
So they can find additional information and set up an appointment with one of our mortgage experts by visiting our website. That's profcu.org.
Do we have any special offers for new members?
We actually do. So for a limited time, using a promotional code, new members can save an additional $500 off of our already low closing costs.
Wow, you can't beat that. Well, thanks so much, Chris, for coming in again and breaking down adjustable rate mortgages.
Thanks so much, Beverly. It was great seeing you again.
You too. And as Chris mentioned, you can visit our website for more information. If you liked the video, please leave a comment below and share it with a friend. Thanks for watching, and we'll see you next time.